Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So SPY bears coming out with a vengeance today with a gap down open. And if you look back historically, most of the gap down opens that we do see come after closes at the low of the day. So if you are a bear, the ideal close is a low of the day close. And really you can see the amount of follow through bears can get when there's no clear support levels nearby. As soon as SPY broke the low of consolidation, free fall. When XLF broke its low of consolidation, and just realizing I don't have XLF up right now, but when XLF broke its low, that key level I drew out, it was just an absolute free fall. And now QQQ broke the key level and it was a significant dump. So the lack of any nearby support is when things get extreme, and when things get extreme like this, we see correlations pick up significantly between individual names, between sectors, and we have the high bear volume that was required to head back down to our August lows. So from where we stand right now with where we closed today, 288.16, we can pretty much say that a $6.40 drop takes us back to the low, and the bulls would need a $14 move to get back up to the high. So the needle, it's like the bears are sitting there with a checklist where every time I say something, I need to see this, I need to see this. It's getting checked off every day. So the bears are absolutely coming out with a vengeance. That being said, because of the speed of this dump, if we were to see another gap down open tomorrow, or really just red to end this week, and if we're going to test these low 280 supports in daily oversold conditions, which would be the case if we do see another $5 drop, I would be looking to play a bounce. That being said, I would also be looking to go bearish on a daily lower high. So I would not be looking to go bearish on a break of these supports at this stage, but I would be looking to play a bounce off of those supports, and then for a daily lower high to be looking for bearish entries, anticipating that if we see continuation, the weekly uptrend will be lost, and that's when we will get follow through. So that's my game plan right now, is to be looking for bullish positions if we see these 4-hour RSI levels stay oversold. Again, we can go back historically. What have the 4-hour RSI levels done when they get this beat up? And we can see back in the previous August dump, we got down to 15. Back in the December dump, we got down to 17. So with where we stand right now, we're at 24. We had some news right at the end of the day at the bell about further tariffs from the EU, or I should say tariffs on the EU. And if we drop $4 real quick, and really we could drop $5 before we get to that absolute low, actually $6. But if we drop $3 to $5, $6, we're going to be looking at this 4-hour RSI getting close to those historical bounce levels. Daily RSI would be getting to oversold. Hourly RSI cooled off at the end of the day today. The question heading into tomorrow is this another bear flag that's going to drop to a lower low with a break of 286.64 tomorrow? Or can the bulls hold 286.64 tomorrow morning and then break 288.95 to change the hourly trend? If we change the hourly trend, we zoom out and we look for a daily lower high to be set, and you better believe there's a lot of bears waiting for entries on that daily lower high, potentially myself included. So that's my current game plan. If we were to see little weak bounces and putter around, cool off RSI levels, then we could absolutely break through 281.72 without bouncing from it. It essentially is determined for me by how fast we drop to those levels. If we're going to free fall to those levels, I'm looking for a bounce. If we're going to stair step our way down, it's more likely that we can break those levels when we reach them, because those hourly RSI levels, or not the hourly, but all RSI levels, will cool off. I want to go over a trade I made today on SPXL, and I was traveling today, so not ideal for trading, but I was looking at a setup just to position myself for the potential of an end of day bounce, and knew I wouldn't be able to sit at my computer and watch it. So I needed a couple of things. An entry that I liked with low risk, high reward, and a clear stop level to establish and put in as a stop level. So I know when I close my computer and get back on the road, I'm just fine. So what I did was I watched this 5-minute bounce. I saw increasing bull volume. I saw a sizable bounce one of the strongest 5-minute bounces that we'd seen at any point today, and we had rejected from the bounces every single attempt, all just 5-minute lower highs all day. Look at the 12-period exponential resistance and how great a guide it was today, rejecting 4 bounces in a row. So increasing bull volume, most significant bounce, closing candles over the 12-period exponential resistance, this red line, for the first time today. Then from there, I watched and I just said, okay, can we form a higher low and change this 5-minute trend? I saw a rejection from 47.60, a rejection from 47.59, a little double top. We kept fading. So at this point, I'm obviously watching SPY's action and trading SPXL based off of that. So I said, okay, we're fading back down. Bears are not forcefully pushing down to a lower low, confirming a 15-minute bear flag. This is confirming bearish action. Bunch of red candles in a row, no bounces, and a straight drop to a lower low. Straight drop to a lower low, straight drop to a lower low. This was fading, not really getting much strength. So I said, okay, that's enough. Those are enough clues for me. That, and also the hourly RSI, of course, was a factor, where I said, all right, I'm going to enter a position. I entered at 47.27, and I then put my stop under 47 and just watched. And it was a larger position than normal because I want to scale out. I always scale out half of my position, and this is something that I've been doing a lot more in the last year and a half of trading, and I'll never go back to doing anything different. But I enter a sizable order. We bounced from 47.22. As soon as we got up to 47.37, I exited half of my position. Why would I do that? It gives me control of the trade. It makes my break-even price go from 47.27 to 47.17. And at that point, I put my stop loss at break even, because although that would not be breaking the low of the day, I can say to myself that if this little bounce were to drop down to a lower low, I know the odds of the 15-minute possible bear flag would be high, and the bulls would clearly be showing no strength, no follow through on a bounce if it were going to drop down and trigger me out of that trade. So fortunately, I did not get stopped out. And when I checked in at the end of the day, I moved my stop knowing I didn't want to swing a position. I put my stop under this level right here, and I got stopped out before the close. If I had not gotten stopped out, I would have just sold anyway. But that is what ended up being a solid trade, and ended up going, my average was just about, a 60 some cents gain on the entire position, and very worthwhile and very low risk. So that was how I traded the bounce at the end of the day today. And of course, we have that tariff news after hours and a solid drop. And I have zero risk in the S&P 500 right now because I exited before the end of the day. So IWM dropped down. It is testing its August lows. So 144.25 is the most important support level. Solid little bounce at the end of the day. Again, we need hourly trend changes. If we change the hourly trend on IWM, we're just looking for a daily lower high compared to 153.35. QQQ, all about the lows of August. That is what our focus is on. Hourly bounce attempt was weak. There is a possibility of an hourly trend change tomorrow. That's what we're going to be watching first thing, depending on where we open. Bulls have to hold the low and break 184.63. That's the key resistance. The afternoon bounce attempt for all individual names, all sectors. If we do not break that level, it's just an hourly lower high, keeping the bears in full control. If we break that level, we zoom out and we look for daily lower highs to be set on this bounce. And how we bounce, when we bounce, is going to give us a lot of information. Is it going to be just a weak bounce with low bull volume and a bear flag? Is it going to be a sizable bounce that tells us that we could potentially stay in a weekly tightening range into mid to later October? So we're going to get a lot of information when we do see a short-term bounce, whenever that ends up being. So that's something to watch out for. XLV breaking the lows of August. So again, another check mark for the bears. Weekly downtrend in the third largest holding in the S&P 500 now definitely increases the odds that SPY can break its August lows. We're now looking down at 86.77, 84.65, but a very clear weekly lower high and lower low, notable for the bears. The VIX here is up testing 2160, unable to break it today, but keeping its little stair-step daily pattern, and bulls are in full control right now. Obviously, the S&P 500 and the VIX are not directly inversely correlated, but if it were, just as an example, we would be looking at SPY testing the lows of August 28th today, and that's not the case. SPY is still well above that level by multiple percent. So if from where we closed, or actually from the low of the day, if we were going to be testing that level, it's another 1% plus drop. So a little bit more follow through for the VIX bulls, then we are seeing weakness in the market, which is obviously a good thing for the VIX bulls, but they want to get over that 2160 level, and our new gauge of strength, as long as 1580 holds, these little stair-step higher lows keep intact, and the bulls have that momentum in their favor. So congrats to the volatility bulls, 2 big days in a row, and the bears have had their way with the markets in that same period of time. What has stood out to me for precious metals, this is not the bounce the precious metal bulls are looking for. This is a regular bounce. You show me this chart and you show me silver, and I would say, S&P 500 is probably consolidating, but nothing notable. If you show me that chart on SPY the last 2 days, I would say, yeah, gold and silver are probably up close to testing their recent highs. And the truth is we're not. So that to me is notable. We're just looking for gold to give us a lower high compared to 1536. We're looking for silver to give us a lower high compared to 1872. And look at the bull miners. That's a bear flag on the daily time frame. So to be seeing the miners form a daily bear flag off of a double bottom of support just shows me weakness. So not impressed with the precious metals bounce. The dollar's strength hitting a 2.5-year high probably has something to do with that as well. But bear miners and bear metals are looking for entries in the near term, and ideally trying to time it with a market bounce as well, because bear metals and miners should get some help if we do see an oversold bounce in the S&P 500. Oil just still struggling. Bearish reaction to the inventory report. The 4-hour downtrend has just been such a clear guide for well over a week at this point. Our new lower high is 54.41. The 4-hour RSI gets oversold. It cools off to allow for another leg down, and the daily RSI is approaching oversold at this point. Weekly support level has broken. 50.51 and 50.59 is our double bottom and the most important supports. If we were to drop down to those levels in daily oversold conditions, I'd be interested in a bounce play, but otherwise the bears have complete control, and the exponential resistance has been a great guide here for that bear control. Natural gas also still weak, no bounce follow through. We're almost oversold on the daily. We went from oversold on the daily to overbought to oversold. Tons of volatility. I'm still interested. I just haven't found a good risk to reward setup that I like for an entry into natural gas. The hourly and the 4-hour RSI have not gotten oversold enough to the point to get me interested. So I will be getting interested, looking for a natural gas entry, because we are still looking for a weekly higher low to form. It'll probably just be for a short-term oversold bounce play. Can't imagine I'm going to hold natural gas very long, but every day I do check that as part of my routine for a potential setup that I could be looking for an entry on that morning. At this point, the most important resistance for me is 286 and 289. We can consider that a double top, and anything under that is just a lower high on any bounce attempt that happens overnight tonight. So bears still have complete control. We have the hourly as our guide in the markets. Can we hold the low of today tomorrow? If not, the bears still have control. The 4-hour RSI is going to be useful. That helped us on the August bounce that we saw, and it also helped us on the December bounce as well that we were looking at. You better believe I will change my tune. I am definitely a bull in these markets as long as the weekly uptrend is intact, and it has been intact pretty much for the last 10 months, but I will definitely change my tune if we lose the August lows in the S&P 500. The question is, can we hold them before we see a bounce attempt, which I think is more likely, which is why I will be looking for a bounce if these support levels do get tested sometime in the next 2 days. If we see a green day tomorrow, we're going to cool off hourly, 4-hour, and daily RSI levels, and that makes me like a play off of those support levels less. I would like to see a gap down open tomorrow and give me 4-hour RSI in the teens and a drop to 282. I'd be looking for that bounce. But either way, like I said, bears scouting daily lower highs for their entries. Let's look at our weak tech sector names. Amazon, bear flag on the daily being confirmed. The weekly downtrend already in play. Facebook weekly downtrend already in play. So one by one, now the healthcare sector is in a weekly downtrend. Question is, will the S&P 500 and QQQ follow along? XLF has more space to work with to hold its weekly support level, which is why QQQ is going to be more important in the short term as far as the August lows are concerned. Getting very interesting. Next 2 days will be very telling, and we'll take it from there. Congrats again, bears and volatility bulls and bull miners. And we will check back in tomorrow and see if the bulls were able to hold the low of today or if further downside is following through.